All in favor? Aye. Opposed? No. We have one disability pension application. Not sure if Jerry is on.
Yes, I am. Can you hear me?
Would you like? Yep, perfect, Jerry.
Good.
If you'd like to just give a brief description of it.
Of course,
Explanation.
David Gendrick was approved for disability benefits. The disability, the SSDI award was prior to his retirement date, so we did a retroactive adjustment coincident with his date of retirement. His new monthly benefit is $2,155.35. I did have him complete a new declaration of retirement specifying the new amount and the fact that this is now a disability pension versus a traditional pension, which he did complete return, and that was included in the packet of material that Helen emailed to everybody.
Joe, any questions?
No, it looks good to me, Frank. I moved to approve or move it to the full pension board.
I just want you to know that I was in contact with Charlie and he's reviewed everything and he's also in agreement with this. So you moved, I second, all in favor?
Aye.
Opposed? No. Motion for adjournment.
Move to adjourn.
All in favor?
Aye.
Motion's adjourned. Thank
Okay,
you very much.
one down.
One down, 3 to go. Next, I call the meeting to order of the Norwalk Municipal Employees Pension Board. Are there any public comments? If not, a motion to approve the minutes?
There were a couple corrections on the, well, let's see, we're on, yeah, I'm sorry, on the OPEB minutes, never mind. Off
Okay.
the thought. Yeah, motion to approve the minutes.
Second,
Seconded.
all in favor?
Aye.
Opposed? No. Approval of the pension applications?
Okay, we have 2 pension applications for this month. The first one is Rosina Penzino with the Board of Education. She is 72 years old. She is getting a regular pension. She elected the standard option. Her monthly benefit is $2,899.23, annualized to $34,790.76. And the second one is Donna Rastaki, also with the Board of Education. She's 62, so hers is also a regular pension. She elected the standard option, and her monthly benefit is $3,093.45, annualized to $37,121.40.
Does anyone have any questions regarding these 2 pensions? If not, is there a motion to approve the pensions?
I got one real quick question on Rosina's Pensino. Her annual benefit is 34,000. Her final average salary was 37,000.
Yes.
I thought you couldn't be above 70%.
Let me pull up her worksheet.
If it's right, boy, that's a home run.
Yeah, why work?
She is 72.
Yep.
Okay, well,
I thought there was a cap though at 75% of a pension. By the way, I'd like to let everybody know that Charlie is fine, but he did get the virus. He was in the hospital for a week and he's now on oxygen, so he won't be joining us. So I just wanted to pass that along. I'm sure that we all hope that he recovers well. He's certainly been a member of the board. He's got the longest tenure. His insights and his legal mind is excellent for the board. So I hope he has a speedy recovery.
Okay, I'm going,
He was at Norwalk Hospital for a week. He's out of the hospital now, but he's on oxygen at home.
okay, I will follow up with the board sheet, because John Schlosser and I worked on this one together and I need to pick his brain a little bit. So I will follow up with everybody and get back some answers for you as soon as I have a chance to speak with John.
So for now, perhaps there could be a motion to table that pension, the Pansino pension, and to approve the Rostowski pension. Does anybody want to, is that a suggestion?
Yeah, I'll make a motion to defer approval of Pansino pension and approve the Rostowski pension.
Is there a second?
Yeah, right, yeah.
I second.
All in favor?
Aye.
Aye.
Opposed? Passes unanimous.
Hey, Frank,
Comments, review?
before we move on, the last ones with the disability, a question for Jerry. Did the forms come back with the disability checked?
I'm not sure I understand your question, Joe.
I think at the last meeting, we approved the disabilities with the insinuation that we were going to get the forms with the box checked for disability.
Yes, I did receive those from both retirees who were awarded SSDI benefits. I asked them to complete a revised declaration form, both did, and return them to me.
Thank you.
Right.
You're welcome.
Right, there was that request. It was in the minutes. By the way, Jerry, we should actually vote as a full board to approve the disability pension, correct?
I believe that's the protocol, Frank. Yes.
So for most people, there was a meeting previously of the disability committee, and we recommended that the board, the entire board, take up the matter of the disability pension. The disability pension committee recommended approval. Most of you heard the discussion beforehand, so if there's a motion also to move to approve the disability pension.
I move to approve it.
That was for the,
Right, we recommended it goes to the full board,
yes.
right? There's a second, all in favor?
Aye.
Aye.
Opposed?
Aye.
Aye.
Excellent, thank you. Brett, performance review?
Thanks, Frank. Good evening, everyone. I'm going to share my screen here. Oh, looks like the host is not allowing me to share my screen. Not sure if I can get that.
Wait 1 second,
not-
please.
Thanks.
Okay, you should be all set.
Yep, perfect. All right, can everyone see my screen here with the flash report?
Yep.
Great. So as of October 31st, you can see total plan assets about 452 million, down slightly from the end of September. You can see some unrealized investment losses of about 5 million and about 2.6 million in withdrawals. given the equity market run up, you can see US equity overweight by about 2%, international equity slightly underweight, overweight to global equity, but we're waiting for Blackstone $4 million redemption to hit in January, so that'll reduce that. And you can see underweights continue for private equity and infrastructure. All asset classes are within their target ranges. In terms of performance, run through fiscal year to date and longer periods here. I know LSV was supposed to present at the last meeting. This deep value manager has struggled in this growth environment that we've seen over the last 5 to 7 to 10 years. We do plan to have them come in January so the board can hear from them. Again, deep value, it's certainly been out of favor. And on the opposite end of the spectrum, you can see Columbus Circle, and their investment style has certainly been in favor, to say the least. You can see outperformance of nearly 10% fiscal year to date and over 30% for the trailing 1 year. So extremely good returns from Columbus Circle. If you recall, Cliff Fox stepped down as really the lead PM and founder of this team and strategy. So we'll continue to monitor them, but so far performance continues to be very good. In terms of international equity, you can see Artisan underperformed their benchmark, and they've had a tough time. If you recall, this strategy tends to have a pretty significant overweight to financials and an underweight to tech. And being underweight to tech in this market environment has certainly hindered them. They're a manager that we'd like to have in probably March of next year. It's been a little while since the board has heard from them. Silchester, while on an absolute basis has not done as well as some of the other managers, on a relative basis, they continue to do extremely well. You can see fiscal year to date outperformance of about 2% versus their value benchmark and up about 6% over the trailing year. BlackRock, the Emerging Markets Alpha Tilts Fund, has done very well. You can see outperformance both fiscal year to date and over the trailing year. So pleased to see that risk control approach continuing to do well in a volatile market. Within global equity long short, you can see that Blackstone's done really well over the last year, up over 12.6%, easily beating the hedge fund benchmark. Meanwhile, ABS, they tend to play in a little bit smaller cap market, and they're also a little more global, which has underperformed domestic. So their returns aren't as good, but still positive performance, and we'll continue to keep an eye on them. In terms of fixed income, both your core and your core plus fixed income managers have delivered outperformance fiscal year to date. You can see MetWest continues to do well, and for the trailing year, strong performance from them. Absolute return manager UBS has done extremely well over both the fiscal year and 1 year period. And PIMCO, while they've underperformed, they got whipsawed a little bit in the first quarter with some of their risk assets, such as emerging markets equity. I think it's important to realize that the benchmark, the US TIPS index, is really not what's in that portfolio, but it's what they benchmark themselves to over a long period of time. So, and you can see over the 7 years, they've outperformed that. So total fund fiscal year to date, this does not include private equity or infrastructure, which continues to wind down. Strong performance, up 4.3%, well ahead of the benchmark. And you can see longer term returns of over 5 and 6%. Any questions on the pension performance?
You know, Britt, I got from Silchester today, in fact, and they have that the month, well, this is November, but year to date, they are down 4.4%, and the index is up 3%, and that's gross. And do they charge us? Isn't it like 60 basis points, roughly?
It's higher than that. I think it's a tiered fee schedule. It's probably more like 85 or 90 basis points. I think one thing to keep in mind, Silchester has been in the portfolio for a very long time. Certainly not a favorable market environment for international value managers, but you can see even, over the trailing 1 year period, they've outperformed their target benchmark by 6%.
What were you saying, Frank? What were those numbers?
Year to date, they are down 4.4%.
Calendar year to date.
Calendar year to date, and the market's up 3%.
Which market? The MSCI EFA Value Index?
Yes.
No, it's actually they're using just the EFA benchmark. So the value tilt has done much worse than just the MSCI EFA. So if you see on the screen here under developed markets, we benchmarked the total developed markets portfolio to the MSCI EFA. You can see fiscal year to date up 61 basis points versus the value index down about 2.9%. So in their report that they send us, they benchmark themselves to the EFA, but their strategy more aligns with the EFA value index, which is why we use that benchmark in the performance reports.
Yeah, because it didn't seem to foot with what we see here. Your numbers, Frank.
Right, but this is what Silchester sent me.
Oh, yeah, fine.
I will forward it to you if you'd like.
That's fine.
But so at least this year to date, if you include fees, they're down about 8%. They're underperforming by 8%.
And but how much is that value versus growth? I think that's a point Britt was making.
Right. So the EFA benchmark is more of a core benchmark, which is why you have Artisan, which is a growth portfolio, and Silchester, which is really a value portfolio. And when you combine them, we benchmark them to EFA. But as a standalone portfolio, Silchester, we believe, it should be evaluated compared to international value managers and international value peers.
I mean, if you look at the EFA index, which over the last 12 months is down, let's say 6.86%, and then you look at the value index, which is down 18.42%, that means the growth index has to be up substantially.
Right. You can see here 5.5% for the growth index.
And then so
but I would say that I'm looking at the portfolio and it has like Honda in it, Toyota, Hyundai, Santa Fe, GlaxoSmithKline. Those are, I would say that the portfolio is value. I mean, I don't think Toyota is considered a growth company or Honda.
Right.
So I
think we agree.
Yeah.
Yep.
Sounds like we're segueing into the Silchester contribution discussion, Frank.
Could be.
I just want to make sure the goalposts don't move before we get there.
Well, before we go there, I'm happy to answer any additional questions on performance, or we can dive right in, whatever you want to do, Frank.
The one thing is too, are we, the benchmark, is Henry on?
Or is Chitsame on, maybe?
Or Chitsame?
Chitsame's on.
Chitsame, we just wanted to confirm, did the discount rate change to an eighth below 7%, or is it still 7%?
I think that changes on our fiscal year.
Yeah, I was just looking at the actuarial report. We're at 7% right now.
Yeah.
Right, so it'll change after June 30th.
Correct, yeah.
July 1.
July 1, 2020 will go down.
21. Yep. And cash-wise, Shitsune, how are we with cash?
Well, we'll get that 4 million in January.
Oh, yeah, that's
So-
right. Good.
Mhm.
Okay. Thank you, Britt.
Thank you.
Any other questions regarding performance? If not, Silchester discussion?
Great. And just a few comments, Frank. In terms of Silchester, you can see that within developed markets, their allocation's about 37.9 million. It's below Artisan due to market volatility and the way growth and value markets have gone over the last few years. If the board was interested in making contribution to Silchester, they are still open. They opened up in the early spring, if you recall, after I think they had a 7-year new client wait list. And there's about $38 billion in the fund. So they've seen some outflows, but certainly some inflows. And in terms of a contribution, we would really want it to be incremental. We don't really want to change the tilt between value and growth within international or domestic for that matter. So we would suggest a $3 million contribution if the board was interested. And in terms of where this could come from, the most, I think, sensible place from our standpoint, is Columbus Circle. Columbus Circle has done extremely well. They're up over 50% for the trailing 1-year period. They are a manager on watch given the organizational changes. Might be a good time to take some gains off the table and contribute to Silchester in an area that has done less well over the last 3 to 5 years. That would be our suggestion, and I'll kind of open it up to questions from there.
Is Columbus Circle, are they small cap?
They're SMID cap growth.
Their hot hand. How long have they had a hot hand? I mean, how long have they, this big number here?
Yeah,
Is it just
performance tends to be a little lumpy. I mean, in the last 5 years, they have certainly presented to the board on more than one occasion due to underperformance that I can remember. But their, secular growth philosophy has certainly been, I mean, you can see if they're up 10% and 30% over the last 12 months, that's trickled down to the 5 and 7 years. You can see that that's really been gangbusters for them. It's I'd have to look at the full performance report to get a more calendar year by year look at it. But the more recent performance from the trailing year has significantly helped their track record.
Yeah, by quarter, this is Tom, Joe. By quarter, the last 3 quarters have been very strong. So they're up this is through the end of the last full quarter, 9/30. They're up over 39%, 39.15 versus the index at 11.58.
And they're a blend. They're not growth or value, correct?
No, it's growth.
Oh, it is growth.
Oh, yeah.
And when they've underperformed, we're obviously talking about the SMID growth index, right? That when we talk about their lumpiness.
Yeah.
Yep.
So you're saying Columbus Circle has been lumpy? Because looking at this over the last 7 years, they've had pretty significant increases, right?
Yeah, that's the annualized though, right? So what Britt's talking about is quarter to quarter. The excess returns for the last 3 quarters have all been north of 6% relative to their own index. So they've had a very strong relative year. And then that is reflected in the compounded annualized numbers going back 7 years. So
Understood.
Yeah.
So, but the recommendation is to take money away from Columbus Circle and give it to,
Mhm.
Yes.
Right.
which does not have a great track record.
No, it has
Well,
an excellent long-term track record. It's just been out of favor recently.
Yeah, on an absolute basis, the returns aren't as good, but on a relative basis, it has done extremely well.
Britt, or Tom, do you know how they did in the month of November, which was a pretty busy month in the markets?
Columbus?
Yeah.
Well, I know that November was an extremely good month for equities in general. I don't have any report from Columbus Circle, though.
Okay.
You know,
Same with
Do we, is there a quarterly report available where you do I couldn't find the June one or the September one, where you have a longer term history and some risk figures. Is that available?
Yes, I sent it to the board shortly after the last meeting was canceled. I can certainly resend it if everyone would like.
Yeah, I don't know if everyone would like, but I would.
Sure, Vic.
Sure.
Britt,
You know-
the 97 million that we have in the Russell 1000 index, out of curiosity, is that a cap weighted index or is that equal weighted, the one that we're in?
I'm sorry, Joe, say that again.
The 97 million that we've got in the Russell 1000, the index fund.
Yep.
Is that cap weighted or is that equal weighted? In other words, is that the big stocks,
Yeah.
Apple?
It's cap.
Yeah,
It's cap weighted. Yeah.
You know, we only have 21 million with Columbus Circle. We have almost 38 million with Silchester. Columbus Circle a year ago would have had 14 million. Columbus Circle is under 5%. It's, you know, it's a growth position, you know, and I don't know whether it makes sense to move from domestic growth to developed markets value. Just doesn't seem like a reasonable shift to me.
I agree.
I think, Frank, one thing to keep in mind is that the board does have an investment policy, and when it comes to targets, you can see domestic equity over 2% over target as of October. In November, markets went straight up as well. So, you know, our projections, if I use the indexes as a approximation for where these values stand today, we would guess that domestic equity was closer to 31%. So if there was no appetite to take it from Columbus Circle, we would certainly recommend from the Russell 1000 index fund.
Rick, can I ask a question? I know this is the target, but we have ranges, right, for each of
Yeah.
these? What's
We
the
do.
range for the US equity? And do you happen to know? I know you
Yeah,
probably don't have
it's
it.
22 to 32%.
So we're still
so
within range of,
as of October. With the markets were extremely good in November, and we would say they're probably about 1% below the top end of the range, which
okay.
is not, you're not breaching anything, but it is significantly overweight.
I'd be more inclined to take it from the Russell 1000.
But why are we putting more money into Silchester?
Right.
That's the question I have. Why are we putting more money into Silchester? It's like, to me, when I look at markets, I want to have money in the markets that are growing. I mean, we could have sat here, if we were doing indexes, we would have said 2 years ago, well, tech is really going crazy and whatever is not doing is underperforming. The banks are underperforming. Well, then they've continued to underperform and tech has continued to outperform. So I think, isn't it an idea that you hold your winners? Why are we going to,
Yeah.
I mean.
Yeah, you hold your winners. you hold your winners, but at some point the market turns.
Yeah, but Silchester, and let's see, if you look at what you're saying is we can guess because the value index has been down on average for the last 7 years. I mean, we could have said 5 years ago it's time to turn. It's underperformed long U.S. equities substantially for fiscal year to date, 1 year, 3 years, 5 years, 7 years. So should we have done it 5 years ago and said now is the time because it's underperformed for 3 years? Should we have done it 3 years ago when we said, well, it's underperformed for 4 years? I mean,
My feeling of moving money to Silchester is that they have, from what I've seen, they have a very unique decision process that obviously works because they're outperforming their benchmark by a substantial amount. The way they make decisions is that it's not, it's not just outcome based. They have a very, very strong process and a decision process that I've never seen anything like it. Never. And I'm on my side, in my side business, I'm involved with a firm that looks at getting alpha out of the market through your decisions. And I haven't seen anything like their decision process. It is unique, it works, and I don't know whether value is going to recover on growth. I don't know whether international markets are going to narrow their gap with U.S. markets. But I'll say one thing is that their decision process is something that I think that is unique, adds value, and will get alpha out of the market on a continual basis because they've shown they can do it. And I think that is very rare and very unique. And I think and this is an opportunity to put us with success, and it puts us in a good position. I don't know whether we're going to whether value is going to gain on growth or whatnot, and that's not my area of expertise. But boy, their decision process and the way they do things is something that I think we should take advantage of.
I think,
Hey, Frank,
the other, go ahead, Joe.
one of the things, by the way,
Frank.
can I just mention something about performance? I have Silchester's September up here. It says quarter to date, they were up 3.3%. That's gross. So that means they were only up, say, Brett said they could be like 80 basis points, 85 basis points. So that means it'd be up 2.5%. The index was up 4.8%. Then in the November.
Is that the value index or the growth or the total index?
That is the index that they benchmark themselves.
But we've already established that's not the index used, Frank.
That's not, I'm reading it, what they sent me. They sent me.
That's fine, but it's like you're repeating numbers that we agree aren't right to prove your point.
I think the way, Frank, that the board can justify this if we agree is more of a strategic decision when you look at rebalancing from overperforming and underperforming assets. None of us, we can all look in the rear view mirror and look at past and look what's happened, but looking forward around the bend, the way that we could justify adding money to an underperforming, not on a relative basis to their benchmark, but as far as underperforming in general, the U.S. markets, is strategically looking at and rebalancing the portfolio. That's the only way that I can justify adding money to, international value at this point in time. And that's only, that's only a rebalancing mechanism, whether it's Silchester or any other international manager. That's the way that I can justify saying, okay, we're a little bit on the high end to the point about the ranges. Got it. We're at the high end. So maybe we tweak it a little bit. Maybe we do 2 million or something like that from, to bring it more in line from a strategic rebalancing point of view.
Yeah, I tend to agree with Joe on this, that, I think Columbus Circle's performance has been great, but can anyone realistically, expect to generate 50% a year? I don't think so. So, and I don't think any of us are smart enough to be into the game of market timing, US versus, EFA and all that. So that's why you have asset allocation guidelines. So I think disciplined investing would say, move some money here out of domestic into international. And again,
I'm not saying Columbus Circle. I'm saying the Russell 1000 myself.
Either one. Yeah.
Yeah.
But the Columbus Circle, I think the question is, do we expect them to continue that performance, or should we take some profits?
Well, they're hot right now.
Can I ask 2 questions?
Of course.
So I understand that their decision-making process is unique. Just very high level, I'd like to hear what makes them unique. And then I guess my second question is, we already have 38 million with them. So I don't know if you could answer that one.
By the way,
question.
we have nearly 40 million with them.
Okay. Here it says, oh, right, because this is September. Okay, got it. So that's quite a bit of money. But I guess I'd like to hear, and I'm sorry, I don't know what makes their decision process unique, because that is interesting to me.
Rich? I think you have.
Well, so Kari, and Tom, step in here if you feel the need to, but it's a small team with a relative value approach who has been doing this for a very long time, to the point where the strategy was closed and there was a wait list for 7 years. And in the early spring, they decided to open up the strategy to new money, which is the first time that Norwalk's had the ability to contribute new money and not be on a wait list to this strategy.
Okay.
So yes, they do have almost 40 million, and there's a slight underweight to international equity. To Joe's point, if Norwalk was interested, we would agree with an incremental addition to Silchester now that you have the opportunity to further invest with this team that has been closed for so many years.
Is this the managing director that came in and spoke with us in person? It was a woman managing director?
Yes,
they presented to us earlier this year, or last year, excuse me.
Yeah, I would say, Carrie, from a process perspective, it is a very differentiated strategy from a Callum perspective, and I agree with what Rich said in that regard. So just to give you some examples, not to belabor this, but they follow an anonymous voting process, and the intent of that is to prevent groupthink. So they'll anonymously vote on proposals for what they're going to research. they'll anonymously vote on approval of names, the stocks that meet their quality criteria. Anonymous voting
Now
on,
I remember.
right. They
It was
trim or
very
add to
unique.
the name.
I remember their presentation.
Yeah, it's a differentiated approach. The long-term results are outstanding. Okay, so this strategy incepted in 1995. Their annualized return is over 11%. The index is at a 5% annualized return.
Got it. Okay.
They're a world-class manager, and they've been closed for years. As Britt said, one thing that's happened, and we're having this conversation tonight, folks are capitulating on value. So they're giving up on value investing and chasing growth investing. And what we're asking Norwalk to do is to be disciplined and stay the course, not try and time the markets, trim from your winners and give to those that have had short-term underperformance, but that we believe will outperform long-term.
Got it. No, I remember them, and I really was impressed with how they make the decisions. I remember them being unique. So, okay, I remember who they are now.
So, why don't we try and unpack this decision? So the first decision is, do we want to move from money from US to international? And then the second decision would be what specific fund, money to which, from who to whom, which ones specifically. So does everyone agree on, do we agree on the first point?
Yes.
Do we move money? I don't. I think that you stick with winners, and right now the US market's the winner. That's what I believe. But if you want to propose a motion, I want to question though, before we do that, Silchester was closed for a long period of time. And at one point we were told that it would be like several years, 5 to 7 years before they would take money. I did send you an email, Brett, about were there redemptions or were they expanding the size of the fund? And
Yeah.
so,
So-
but what I'm saying is they sound like the New York Knicks used to say they had a 7-year waiting list for season tickets, and then they had no waiting list at all.
Yeah, but the
And it
Knicks,
seems like,
the Knicks
you
have
know,
a
we were
bad
told-
decision process, Frank. That's not a fair comparison. That's
To
not a
compare
fair.
the Knicks to anything is not fair.
I would-
I agree with that.
I frame
Oh,
the decision in deference to Jim. I frame the decision a little bit differently. I frame the decision as we have a chance to to add more money to a manager who has a very unique process that has worked. It happens to be in an international value area. So I'm turning it on. I turn it on its tail in the sense that here's someone that differentiates himself by their process. And I agree with Frank that I can't top tick the market, but I have a lot of confidence in and I think we've seen a lot of managers come in, and we've seen and this is something that is different and that has worked. And that is the compelling thing for me. And and that's where I'll measure if I'm wrong or not. And the outcome will be if they, if they change their process somehow. But it's, I just think it's a smart move to go for people who are the process is very unique and
Hey,
successful.
Frank, we're talking about $2 million. Would you?
That's fine. I mean, I do think though, their performance is a little overstated because the benchmark that they use is not the benchmark. For some reason, it's not the benchmark we use on the presentation, which Britt, if you could, that might be something to review. And their performance year to date is they've underperformed by 8 full percent. So that's, I know a lot of people in this business who have had great strategies, and at some point and the strategies used to work very well, and then they don't. I think we've all heard stories about people like that. Maybe their strategy continues to work, but we already have $40 million with them, just about 39 and change. So we do have a lot of money right now with Silchester.
Yeah, Frank, I don't think anyone's arguing that you don't have a lot of money with Silchester, and I'm happy to bring back some further details on why we think that they should be benchmarked and compared to an international value benchmark and peers. I think more to Joe's point, I mean, you can see there's a pretty big overweight to domestic equity. Some board members have expressed conviction and a desire to contribute to Silchester now that they have the opportunity to. And we're really just talking on the margin here. Why don't we reduce our domestic equity exposure according to our investment policy and add to an underweight in international equity?
Fine. Would somebody want to propose, say, moving $2 million from, I mean, I'm trying to compromise. That's all. I mean, if you don't,
Okay.
if you want to make a motion, you make a motion.
That's fine, Frank.
I suggest that we move 2 million from the index fund into Silchester.
I make a motion that we move $2 million from the BlackRock Russell 1000 Index Fund
Any discussion?
We beat this.
I think we've had that already.
Just got to ask one more time.
Okay, I have a question. This is to Rich. Instead of 2 million, how much do you think we should contribute to them?
Well, the original suggestion was 3 million. 2 million is fine. On the margin, I don't think it makes a lot of difference. Though one question I would have is that if we get to a point of where due to our investment guidelines, we need to reduce the amount of exposure to have in U.S. equity, where would we go next? Would we go into fixed income?
Well, that was going to be our second discussion tonight, is based on November returns. We would suggest taking 5 million from the BlackRock Russell 1000 and putting it with your fixed income managers that are underweight as of, we expect them to be underweight a little bit at the end of November.
Now you're pushing it.
Yeah, well, let's.
So is
That
your
one's gonna-
recommendation
that one's
going to
gonna-
be now doing 6 million, Britt?
I mean, that.
I-
Wait a minute, whoa. We have a
Hold on,
motion.
Frank. Get off the floor, Frank.
No, we have a motion on the floor, and it was seconded, and there was and I asked for discussion. Okay, Kari asked a question. I think Rich answered it well. So if there's no other discussion, call for a vote. All those who want to move 2 million from BlackRock to Silchester, that's the motion. If you want to repeat it right now, Joe, that would be great.
Well, let's go with it, Frank.
Okay, all in favor?
All right.
Aye.
Opposed? No, passes unanimous. Thank you. Okay. Next one, Britt. Britt?
You're on mute there, Brett.
You're on mute, Britt.
Sorry, guys. Sorry. No, in the same, strategic, when you look at the asset allocation, the overweight to domestic equity is pretty significant, and $2 million is not going to change that overweight much at all. So in looking at where funds are, the $4 million coming out of Blackstone, and the overweight to domestic equity, we would suggest taking 5 million from the Russell 1000 index and investing 3 million with MetWest and 2 million with Prudential. Again, not a tactical move by any means. more to stay within the investment guidelines here.
How much money was that, Brett? 2?
5 million total.
5.
But you know what? I mean, we have guidelines that are very broad, right? That's one of the things when we set it up. I think we can have over 70% in equities, right? So we're still within the bands.
Yep, and we can come back in January if you'd like to. It's just an observation for us. We saw that after November, I mean, to put it in perspective, in November, the Russell 1000 was up almost 12%. The Russell 2000 value was up over 19%. SMID cap was up over 13%. So we saw significant increases from where what we're looking at right now. So it was, again, just a suggestion. We can certainly revisit it in January if necessary.
And isn't December and January the two best market months usually traditionally for the stock market? So it's a good.
We're not too tactical, but could be.
Yeah,
Yeah.
I guess, Britt, the bigger question I would have on fixed income is, given the outlook for what we think the Fed will be doing, is it appropriate to rethink a 20% target?
It is, and one of our big projects that we've been working on is the asset allocation study, which we expect to present in February, and we'll certainly be reevaluating fixed income and the fixed income target.
I mean, it seems to me we're in pretty extraordinary times with cheap money, and I don't know that fixed income is going to be very attractive for quite a while.
We don't disagree.
Let's revisit that in January.
Yep.
So we're going to revisit that in January. Is that the consensus of the board?
Yep. And that,
Okay.
Britt, would that be part of a rethinking of asset allocation targets or not?
No, we're looking to present the asset allocation study in February. So we can see what things look like in January, and if we want to wait until after that discussion, we certainly can.
Okay.
Any other points?
Yeah, can you remind me what the private equity situation is, and what is the liquidity in there, or what's the life of the funds in there?
Yeah,
you don't
so
have to do it now. Maybe we can, do that in January. But it's
well, I think one of the big reasons that we need to discuss the asset allocation and we're doing the study is because private equity, there hasn't been a new commitment in over 5 years, and infrastructure has a 6% target and is essentially wound down to 0. So those are certainly 2 areas that we'll be looking at, and most of that has been driven by the board's desire to stay in more liquid investments. So we will revisit both private equity and infrastructure / real assets in February.
okay. Sounds good.
Yeah, one thing remember is we're going to have, originally it was going to be for this month. I was in communications with Ray, and we're going to have another roughly 44 pensioners or so in January. So, the amount of money that's coming into the fund is going to decline from monthly payments, and our outflows is going to go up. And that's one of the reasons why we have stayed, for the most part, more towards liquid assets.
Do those 44 people, that doesn't include the people who took early retirement, correct?
Ray, if he's on, he could tell you that, but
I thought,
that-
I thought they hit in November.
The 44 is the people who took the retirement incentive program.
Oh, okay.
but we haven't, that has not been calculated. We are going to get an inflow of funds from the city, but the funds from the replacement workers will not be contributing to this pension plan. They'll be in defined
Right.
contribution.
Yep.
If there's no more Brit, you all set then? Then
Yes, all set, Frank. Thanks.
okay, thank you. The schedule for 2021, I did look over all the dates on that schedule. There's no except for December, which is the Assumption Thursday, which is a Catholic holy day, but I don't think that's matters too much. I'm Catholic myself, but there is no holidays or other religious days on the calendar. I don't know if anybody else checked it, but if there isn't, then if there's a motion to accept the schedule of meetings,
So moved.
is there a
Second.
second? All in favor?
Aye.
Hi.
Opposed? No. Any other discussions? Any other matters to bring in front of the board? If not, is there a motion for adjournment?
Motion to adjourn.
So I was wondering if anybody was going to give one. I thought maybe you guys were enjoying this too much.
Aye.
All in favor? Aye.
Aye.
Opposed? No. Excellent. Motion passes unanimous. Next, our third meeting of the night. I'd like to call the meeting of the OPEB committee to order. Approval of the minutes from the meeting of September 9th.
There's a couple fixes required on page 29 in the minutes.
29.
29. OPEB?
Hang on. Back up. Let me get the right folder open here. Let me find it here. Hold on.
Looks like the minutes are about a paragraph.
Yeah.
Yeah, they are, but the attendance. We've got Richard Hendrickson there, but we don't have Jim Hendrickson and we don't have Rich Baskin.
We also don't have Eileen Romero. Who's there?
And we'll get to it, but we have the same issue on the DC minutes, defined
Right.
contribution minutes.
Those names could be added to the minutes. With that adjustment, is there a motion to accept the minutes?
Motion to accept the minutes.
Second,
Second.
all in favor?
Aye.
Aye. Opposed? Passes unanimous. Is there any public comment? Not hearing any public comment. We'll move on to performance review. Britt, you're up.
Thanks, Frank. Give me one sec. I'll share my screen here again. Quickly run through the OPEB. As of October 31st, total assets 106.3 million. Down slightly. You can see some unrealized negative investment returns. Everything's within their target range. You can see a slight overweight to domestic equity given the market run up, underweight to fixed income, and slight underweight to liquid real assets. In terms of performance, again, strong performance for the equity markets. You can see total fund fiscal year to date up about 3.9%, slightly trailing the benchmark, and that's pretty much all due to PIMCO's kind of benchmark mismatch there. And as we discussed in the pension, longer term returns continue to be strong, but some volatility in the first quarter shown there in the last 12 months. Your fixed income managers, like the pension, have done well, outperforming the benchmark. So overall, good returns and nothing to be concerned with.
This shows 6.5% discount rate, or isn't it? It's not the same as the pension fund?
No, it was reduced pretty significantly due to some of the healthcare changes a couple of years ago.
Okay, right. All right.
One thing is that because the domestic market, we do have a different weighting, right, for OPEB,
Yeah, it's
Because-
much more heavily weighted in equities.
right? So
And
we're
the
not going to
pension.
have a problem because we're at, near 70 now. We're going to be above 70 as a result of the market performance in
November.
November.
Yeah,
Is there
and
any- Any,
If anything's breached, we'll certainly bring it to your attention in January, but so far it's in line with the range.
Okay.
any questions for Britt or any other discussion on OPEB? I mean, it obviously looks pretty good. We're continuing to move forward. If not, is there a motion for adjournment?
Motion to adjourn.
Is there a second?
Second.
All in favor?
Aye.
Aye. Opposed? No. Motion's passed. Meeting's adjourned. The next meeting, the Defined Contribution Committee. I'd like to call the meeting to order. I'd like to have approval of the minutes.
Got the
I think-
same fix on attendance on page 32.
And that includes Eileen, correct?
Maybe I add Eileen, fix my name and add Rich Baskin.
Perfect. With those changes of the minutes, is there a motion to accept the minutes?
Motion to accept.
Second,
Second.
all in favor? Aye. Pass.
Aye.
Aye.
Public comments. Are there any public comments? Not hearing any public comments. We'll move on to Empower, the record keeper presentation. Britt?
Thanks, Frank. So as you all know, we went through a very long project to find a new record keeper for the 457B and the 418 plans, and the transition occurred in the first quarter of this year. We have Jim Condon from Empower here, and he's going to give us an update on the transition, the services provided to participants, and what they can expect going into 2021. Jim, I'll turn it over to you. If you don't mind sharing your screen, that would be great.
Britt, thanks so much, everybody, for having us. Good evening. I'm hoping that you can see what I've popped up on the screen. Let me see. Let me click a button here. You guys see that reason?
I think the administrator might need to give you permission to share.
Okay.
It's already available to everyone. There should be a green button in the bottom right of your screen.
Yep. Share screen. I've clicked that.
And then you want to hit my screen. There's probably an option for, depending on how many monitors you have, to click my screen, the first one.
I think I found it.
There we go. Yep, we got it.
Looking good.
Thanks so much. Yeah, I appreciate it. I'm not, we use WebEx quite often, so I'm not as familiar with Zoom. So, but thanks again for having us this evening. Myself, Jim Condon, for those of you, I know I met you briefly at a meeting quite some time ago, but just so you know who I am and recall, I am the relationship manager from Empower Retirement that deals with the city on a regular basis with Ray and with Jerry. On the line as well, I have Mary Beth Dobbins-Beck, who's on the phone, the vice president of this territory, and she's just joining in case there's anything we can have Mary Beth add. So just going to go through it. I'll just give you some quick words on the transition. Definitely it was quite a complex transition, dealing with 3 different vendors and trying to put it all together in kind of a tight format and try to time everything to happen all at once. It all went very well. At the end of the day, everything has come out well. There's no issues, and people are starting to get used to us. And I think part of the story I'll tell you now is kind of why they're starting to get used to us, starting to know who Empower is and how we operate, the tools and services that we, offer them to utilize to actually engage and get to understand their retirement plan, better, and hopefully put them in a position where they're going to be, better off in the future. And how do we do that? Well, I mentioned the word engage. Employment engagement for us, it's all about continuing to study the landscape of how do you engage folks. We've been doing this for a long time. We've kind of changed a lot of what we've done over the years. And some of the key things that we've found is that you want to communicate with simple language. You don't want to use too much jargon. You don't want to use terms that people might not understand. You want to design communication materials to be clean and deliver them in a timely fashion, in times that just keep on, tapping people on the shoulders in different ways and connect with them in the different ways that they like to be connected with, whether it's doing in-person meetings with an advisor, which, of course, we'll get back to when everybody is safe to do that. Virtual meetings have become, of course, the mainstay as we're sitting here doing one ourselves, and that's been very effective. Folks on the call center engage, mailings, all the different touch points we can use, digital engagement. We'll talk a little bit more about that. And ultimately, of course, we don't want to just do these things. We want to measure what we do and make sure it's effective and use that data to better benefit how we communicate with folks going forward. So some of what's here right now, 2020, some of what we've done, everything on this screen is not something that we've done, but this is kind of the way that we look at targeting folks and communicating with them and getting messages out. But some of the things we did do in terms of personalized campaigns, we have targeted email campaigns that go out to folks at various stages. It could be somebody enrolling for the first time, so we'll be getting them certain messaging. It could be somebody that's already in the plan. We may be leading them towards going into one of the tools that we offer called My Financial Path, where it could engage them and help them better understand where they're at and what their next steps might be that they want to take. In 2021, Jerry, the plan sponsor, and I have, of course, been engaged on very frequent basis, and it's actually been a great partnership thus far. Jerry, as you very well know, is extremely caring about what she does, and she's very engaged in the plan, and it's been a pleasure to work with her. And together we've discussed kind of where we've come to at this point and where we need to go to next, and that's some of what I'll share with you here. In 2021, some of the things that we want to engage folks on is investing wisely, just making sure that they are taking a look at their accounts and making sure that they're understanding where they're at and where they need to get to. We have a group called the Retirement Solutions Group that can actually help them with that. It's a team of advisors that can help them in different facets of retirement, and different facets of what's offered within the plan. I'll share with you a little bit more about that towards the end. There's things like the National Retirement Security Week that we do, which is a campaign done around October, which just kind of taps people with a kind of a nice little different campaign on the shoulder about reminding them about different facets of the plan, whether it's investing, updating their beneficiary. It could be different things. It changes each and every year. So that's something that will engage you folks with, in October. Email capture, it's something actually we did in 2020. We actually wanted to make sure we build as much email information and as current as we possibly can, because we find that's one of the best ways to engage with folks nowadays in utilizing digital tools and communications. Beneficiary capture, I'll share some statistics with you in a moment. That's something that we're going to do as a campaign this year. Jerry and I had a discussion of how we both felt it's really important to make sure that in the untimely event of someone's passing, that we can help them through a difficult situation and make it as easy as possible in all fronts to deal with us and get them the assistance they need. So having a beneficiary on file that's current and up to date is very important. We'll be continuing to engage folks on helping them understand the tools and services that are out there and trying to get them to utilize that so they can actually help themselves. And at any point, if anybody wants to stop and ask a question, please feel free to interrupt.
Do you know what? I do have a question, actually, because the beneficiaries are like 72% in the 457 and then 63%, I think, in the other. Do you think like send in like a certified letter or something? Because, as a fiduciary, I think that it would be important that that number is closer to 100%. What is exactly are you going to do to try to increase the beneficiaries on file?
Yeah, and I'll share more of that with you, Frank, but your target is actually what our target is. We want 100%. Of course, it's not a perfect world. Do I think we'll get 100%? I think we'll get at some point close to that, but things always change. So even if you have beneficiary information on file, circumstances change. People have life events, and it still could require, even if they have a beneficiary, that they update it. There's various campaigns we can do, and we can always work with Jerry kind of on one-off type tactics. If they wanted to put something out from the city, certified, that's something we could work with Jerry on. But I'll share with you a little bit more about the campaigns that, we're going to talk about doing for 2021 in a moment. But it
Okay,
seems like
thank you.
some of Oh, you're welcome, Frank. You've seen, hopefully looked at the presentation, so I won't kind of, walk you through each and every number because you can pretty clearly see what they are in the 457 and here in the 401A plan. One of the things I would mention about the 401A, as you very well know, is that we're very aware and are speaking with Jerry about the fact that folks will be able to make extra contributions into this plan for the first time starting next year. So, part of everything that we do in terms of engaging participants does involve our local retirement plan advisor, Darrell Wells. And Darrell's been, intricately involved with Jerry, myself, and the team behind the scenes at making sure that we're tapping everybody on the shoulder as much as we can to say, hey, we're here to help you, and here's one of your local resources. And on top of all the other resources we have, there is somebody right there in Connecticut who's very engaged, and I'll share with you some of the engagement. Somebody had mentioned, I think it was Ray, and you guys were talking earlier about the 44 people who took the early retirement package. Of those 44 people, 27 of them actually did have a meeting with Darrell Wells. We worked with Jerry to reach out to each and every one of those individuals to make sure that they were armed with all the information that they needed to help them make a wise decision before they went ahead to do it. So I think that engagement was, really good. And Darrell had said that I think about half of those people did say even after retirement they still wanted to engage, and deal with the funds that they have in a plan and make sure that we can help them with their holistic picture for spending down their retirement assets if that's going to be the phase of life they get to, which is another important phase.
Hey, Jim, just so we have a basis for thinking about these percentages here, what is the total participant number in these two programs?
You know what? Off the top of my head, I don't have the information. It's not at my fingertips. I can share that with you and make a note on that after the fact.
That's right. Jerry, do you happen to know offhand just a rough number, or Ray? No? Okay. That's all right.
This is Tom, and to Jim's point, I think it would also be good to know, if you have it, Jim, what's left in products like the AXA individual annuities that people that didn't convert.
Yeah, that's an interesting topic. So that's something Jerry and I recently discussed. And I think the number of folks that have converted AXA individual policies at this point is about 19. That's the last I heard from Jerry. Unfortunately, when it comes to AXA at Empower, we don't have that data or that information because those are individual contracts that didn't move to us. We are definitely engaged with people that have AXA contracts. We actually have, I had mentioned, a team of advisors, and there's one in particular who has actually worked with some folks, and there's 3 outstanding that they're currently working on actually transferring AXA assets over. So I'm working with Jerry to see if we can do early in the year next year for her to take a look at the files that she has to help us determine who may be the folks that we need to be speaking with about those AXA contracts. And, just to be the straight up Brooklyn kid I am, I have to say that so far we've had a pretty good experience overall with those funds coming over. But unfortunately, there is one individual who's having a very difficult time. He's actually, I think, a detective with the police department. And we've been kind of holding his hand and doing everything we can to help him for months now.
And I actually, Jim, I have an update for you because I have been checking his account every day. I have had a minor obsession with this particular police officer, and the good news is that the funds were wired to his account today. And I actually called the sergeant and I spoke with him just to confirm that he can go look at his account because the funds were there. So I am very pleased that transaction has finally occurred.
Well, that's great news, Jerry. Thanks for sharing that. That's good to hear.
So Jerry, you're saying, just to follow up before we move on. So Jerry, you're saying though it took months
Yeah, this I don't know what the background is with respect to the delay, Tom, on this particular one. I've assisted in the transition of anywhere between 15 and 20 conversions or rollovers from AXA to Empower, and for the most part, they've all been processed within a reasonable time. I don't know why this particular individual's account was inadvertently, and the delay was unacceptable to both of us. It is possible or even probable that this police officer may pursue it on his own. That is his decision to make. But I have been very persistent, and I have been relentless in just tracking down the status of this particular transfer of funds. And as I said, I've been checking his account literally on a daily basis to determine if the funds have been transferred. Again, no one has provided an explanation regarding the delay. It may have just been that he slipped through the cracks. If I'm willing to give AXA the benefit of the doubt, and I'm not so sure I'm willing to do that right now, but that's not my call.
Okay, thanks for the explanation, Jerry.
Of course.
Thank you, Jerry. So for 2021, just a calendar of kind of schedule of events, so to say. Some of the things that Jerry and I have been talking about are included here, such as the beneficiary campaign. I'll share a slide that would kind of give you an image if you haven't seen it yet. But some of the things that we do ongoing and have already been doing are like personalized participant communication. I'll kind of display for you what that is. It's really a more targeted means of giving participants information that's relative to where they are or the stage of the game that they're at and what they've been doing with their retirement account. Education meetings, of course, are ongoing. As I mentioned, Darrell Wells, our local retirement plan advisor, will continue to engage with participants. He will continue to reach out via email to offer what we call retirement readiness reviews, and that's the opportunity for an individual to sit down and actually go through a series of questions, make sure they understand where they're at in terms of what their goals are for retirement, where they want to get to, what we call lifetime income score looks like, and where they need to get to achieve their goals. And to talk about more than just this plan, to say, hey, pull together all your information, because your decision should be based upon a holistic view, and that's exactly what Darrell's able to do, similar to what the folks on the phone can do for people, but once again, the local gentleman. The beneficiary campaign we've mentioned, a digital flyer, something that we actually did this year as well, was making folks aware of, hey, there's a lot of good tools we have out there. We were tapping them on the shoulder for email addresses. At the same time, we were saying, hey, here's the website information. Go take a look. Here's the app that we have, which we've actually seen a lot of growth in usage by participants overall around the country. My Financial Path is the tools that we want. One of the tools we want to target to help people get a better understanding of where they're at and get more personalized information so they can take the next steps they need to take based upon their current situation. Roth versus pre-tax information, My Total Retirement, which is the full-blown service we offer that has components of advice, whether it's dealing with Darrell, which is a free service, or the folks on the phone, which is a free service, or using our online advice tool, or choosing to use the managed account service, which is available within the plan. I mentioned the National Retirement Security Campaign, and then, the Retirement Solutions Group we'll talk a little bit more about in a second.
Hey, Jim, is one of the things that you generally provide clients, for all the metrics that you keep track of, what the participants are doing, do you offer clients a comparison of how a particular program compares to all of your clients? So we can see if, like whatever the statistic is, beneficiary on file, or, number of times people go onto the website, that we can see how our population compares to your entire client base. Is that something you do?
Yeah, I didn't pull, basically we have a plan review that goes into a lot of different facets and tracks a lot of different data points and does do comparisons. I didn't bring that to the table here. I wanted to focus on kind of what the plan is for 2021, but I'm definitely happy to either follow up with that particular document. I think probably best would be for me to walk through that with you the next time that you invite me to attend the meeting. I can deliver the plan review and give you a lot of different data points. And if prior to that, of course, just shoot me a note, let me know exactly what you're looking for. I'll make sure it's in there. If not, we'll see what we can pull and, what are the data we can provide.
Yeah, that's fine. It's just a matter of, I don't think most of us know what is a good measure on a particular metric. How are we doing versus other plan sponsors, for example?
That's absolutely data we do provide.
Yeah, that's fine. Thank you.
Oh, you're welcome. So connecting with your employees, I just mentioned the app, so just a quick snapshot. You kind of just notice how clean and simple looking, it is when utilizing the app. I'm not going to go through every single point here, but I just wanted to show you those images. So personalized participant communication is something I mentioned, and I'm going to be a little bold here. I hope this works. I'm going to click this watch a video and see if you guys can actually hear this. If you can't, we'll just stop it. But I'm hoping you'll be able to hear this. Can you hear that?
Successful communication is all about creating one-on-one connections and empowering people to take action. In the past, much education was based on running the same campaign to all of the participants in a retirement plan. These were plan-level communications. Then modern reporting on plan data allowed a slightly more targeted approach, where campaigns were run to different groups of people. These are targeted communications. But the next frontier of participant education is clear and obtainable. Communicate directly with each individual based on their individual situation. Or in simpler terms, Empower Retirement moves from plan and targeted communication to true one-on-one interactions. Our participant communications database matches the message with the individual's situation, and we tailor each message based on what the individual did with the last message. If they did not respond, we try again with a similar message. If they did respond and take action, we move to the next opportunity to improve their retirement savings. We are always collecting data about whether or not people respond and act. Plus, all the data we collect helps us improve language, images, and calls to action. So we continually get better at connecting and driving action. One-on-one communication based on each individual's needs and actions. Now is a good time to connect and drive positive actions toward more income in retirement.
So instead of me walking through everything there, I figured it would be nice to be able to display that for you and have somebody else do the talking for me. But, once again, these are just kind of snapshots of what was being talked about there. There's various campaigns that we do on a regular basis that are ongoing through this participant plan communication. So if somebody comes into the plan, they're going to get messaging around that. If somebody's already in and now they need to complete their profile, they'll get messaging around that. And everything will be triggered to the next step. What do they need to do next? Invest wisely. They'll get messaging around that. And if they go in and don't follow through, they may get the same message again, tapping them on the shoulder, say, hey, it's a good thing for you to take a look at investing wisely, enrolling in the plan, seeing where you stand, figuring out your estimated monthly retirement income, and my total retirement. Once again, the full package of point-in-time advice that's available. So ultimately, we're looking to focus on certain goals, as I had discussed with Jerry, and targeted campaigns is how we like to go about that. So outside of the participant plan communication, which is ongoing, we work with our marketing team to develop and deliver campaigns that are going to focus on specific areas. And something like a beneficiary campaign that we've been talking about, the way we go about that is we're going to definitely take advantage of email. We're going to send different messaging out. It could include a video like I just showed. It could be a mailer for those people that don't have information available to us in terms of email. Web banners could be posted. We'll just give them simple messages that will kind of jump out to them. And, it's hard to miss when you see a message that's got that white background. It kind of stands out. Make sure that you do what you need to do. And the other thing that we do is not just a marketing campaign, but I keep mentioning Darrell Wells. And I know Jerry will attest to this. Darrell's done a great job for the folks at the City of Norwalk. He continually engages them, and that's something that he's always going to ask. Hey, is your beneficiary information up to date? So he'll definitely, use that as part of every conversation that he's having with folks. And I mentioned My Financial Path. One of the things Jerry and I talked about is, trying to get folks focused on investing, make sure they're properly asset allocated amongst the options available in the plan and give them guidance. And that's what Daryl does. That's what our Retirement Solutions group does. And directing to something like the My Financial Plan tool that's available is a way to kind of point them down the direction of helping them with the various, areas of the plan that they need to concentrate on and work on. So with the ongoing service and communications, I mentioned the Retirement Solutions group. These folks are there specifically to handle things like talking with people about the investment options, doing what we call a white glove service in terms of distributions and rollovers and roll-ins, helping people with those things and being able to use one point of contact for that we find is a nicer way to help people out. And we've been doing that with some of those folks that have engaged with AXA. As a matter of fact, the gentleman that we were talking about, who I'm very happy to hear that his money finally came off of AXA, he was engaged with one of our folks in the Retirement Solutions group for the past couple of months. He was able to deal with the same person in that situation. So whether it's financial wellness or retirement savings, that's what these folks are here for. These are, folks that can give advice similar to what Daryl can do in the field for us as an advisor. So that's all I have from a presentation standpoint. Does anybody have any other questions for me?
Jim, question. This is Tom from Callan. On the beneficiaries, do you have clients at Empower where you're requiring completion of who the beneficiary is or who beneficiaries are in the enrollment process?
You know what, Tom? That's a good question, and I think it depends upon how you're enrolling into the plan. I'm not sure if we require it for enrollment, and I don't know if Mary Beth would know the answer to that, but if not, I will take that as a takeaway and find out if that is an actual requirement or not. My gut feeling tells me it's not a 100% requirement.
Okay.
Because we don't turn anybody away from enrolling in the plan because they don't want to give
Right.
us beneficiary information.
Yeah.
But I'll check.
Yeah, because like the 401A, I think it showed 65% had a beneficiary, and that's a much younger population in general. And I understand your point about you don't want to deter anyone from enrolling, but just wondering what other ways there are to 63%, that other ways to get that up.
What do you require as beneficiary? Just a name and address?
We can take a name and address, but the complete information would be a name, a social security number, their personal data. The more information we have, of course, the easier it is in terms of the process and the untimely passing of somebody. And I would also give the perspective of kind of where we're at now, where we came from. Of course, we had a transition that happened, back in February to bring everybody onto the Empower platform, and we had to take the data that we were given from the former providers. So now we're at the point that we can actually work on, that shortfall there, that 63%. Of course, like Frank and I agree, we want to be at 100%. So we're going to use every tactic we possibly can to get there. And quite frankly, a beneficiary campaign seems to be one of the more popular things that happens on a regular basis with a lot of clients because it is a sensitive area. And as I keep saying, we just want to make it as easy as possible for everyone involved in that difficult type of situation. So we will work with Jerry. We'll work on this campaign, and we can do other, as I said, one-off type, work with Jerry so that we can target folks not just from the Empower point of view, but I think it's very effective when we team up and they get messaging not just from Empower, but also messaging from the city itself. I find that folks I've been with this company for 21 years, in this business for about 5 years now, and I've always found that the stronger the partnership and the tapping the people on the shoulder from the different points of view gets different results. So I think together we can move those numbers and strive for that 100%.
I have two questions. One is when you have 91 or roughly 92% of email addresses on file, for the people who don't have an email on file, do you mail them information?
Yes. So if somebody doesn't have an email on file when we're doing a marketing campaign, typically we're going to send them hard copy information. That's something that we did, as I mentioned last year. We were trying to tap folks on the shoulder that didn't have an email address, so we did mail them things. You know, we also can use web banners and post information on statements. There's various ways to, you know, get information to those folks.
Well, what I was going, do you mail them a statement?
Yeah, actually, in terms of, you know, statements, it's going to be up to the individual to choose whether or not they want to receive a statement. So 27% of the 401A plan, you can see the number right there. You know, about 23% of folks are opting for electronic statements. So the other 77% or so are receiving paper statements at this point in time. That's in the 401A plan.
You know what, one thing I'm a little confused on too is I looked at the amount of money in the 401A is 7,225,000, and the average here is roughly 25,000. That would give you 289 participants. That would seem like a high number. Would that average balance be higher than that? I thought I saw there was 140 something in the plan somewhere, but it just does, the numbers don't seem to match up quite right.
Frank, I think in the 401 plan, there's probably well over 200 employees.
Is there now over 200?
Yeah, well, that's everybody except for the uniformed employees. It's everybody we've hired since 2012. So about a year and a half ago, the number was about 180 and change. It's got to be over 200 by now, but we'll get that number for everybody.
All right, thank you.
Any other questions?
Very nice presentation.
Yeah.
I'm happy that we chose Empower.
Any other questions?
You know, just let me say this all in all from our side. Number one, I'm personally happy with the way that the plan is working out. And I get emails on a regular basis from Empower asking me if I want to meet with Daryl and go over my investment choices. And another way to measure how well or poorly a vendor like this is doing is how many complaints we get. And I don't think we get many complaints at all about inability to either contact Empower or their performance. I personally have not received any. I don't think Jerry has either. So on that level, silence is a very good indication of good performance.
Good.
Wonderful. Jerry, do you have anything to add to the board?
Nothing that Jim has not already covered. Getting back to the beneficiary issue, part of the challenge is that, and Jim alluded to this earlier, is that the absence of a beneficiary more frequently occurs when there's a change in family status, such as divorce or somebody getting married, and they just neglect to update their beneficiary designation. So obviously they are one of our targeted groups. But I will say that I know for a fact that Daryl has been very, very proactive in reaching out and meeting with people, especially during this time where he can't do face-to-face. He is using whatever alternative means he has, be it phone, Zoom, any kind of virtual meetings, to engage employees and work with them as far as their portfolios, their asset allocation, making sure that they've got their funds appropriately allocated, that they're contributing an amount that's comfortable for them. So he has been really a huge, huge partner, and I get many, many compliments on his availability and his knowledge and expertise. So Daryl has proven to be a huge asset to the plan once we went live.
Well, that's wonderful to hear. Thank you.
Mm-hmm.
Any other questions? If not, we're going to move on to the performance review.
Thanks so
Daryl,
much for your
thank you
time.
very much.
Thank you, Jim.
Go feed my 11-year-old now. He just walked in asking me, "Where's dinner, Dad?" My wife's working late tonight. Have a good one, everybody. Take care.
Thank you.
Thank you.
Thanks, Jim.
Britt, you're up. Performance?
bear with me here. I'm just going to share my screen. All right, so we'll walk through both the 401A and the 457 plans. Here you can see the 401A plan as of September 30th. Total assets about 7.2 million, about 343,000 in new contributions, and a little under 400,000 in investment returns. Here you can see the asset allocation, 92% in target date funds, which are the default investment for participants if they do not choose a specific option, which is good. Jump ahead here. I think it's interesting to see where participants are putting their contributions, and you can see on the top right, about 83% going into the target date funds, followed by some of the index funds and some of the active equity options. And then the bottom chart down here, you can see quarter to quarter how those participant contributions ebb and flow. And, you know, it's been a couple quarters now since the plan has transitioned to Empower, and it's normal to see participants, you know, understanding how to use the website, understanding how to make changes. And you can see on the margin, they've made some changes, but in general, target date funds continue to be the most popular option. In terms of the 457 plan, you can see total assets as of September 30th, about 40.4 million, about $1 million net new investment, and about 2 million in investment returns during the quarter. Again, when this plan transitioned over, there were obviously a number of record keepers involved and a lot of different options involved, and the default was, again, the target date funds, and you can see 75% in the target date funds, followed by the passive and active equity options and the stable value option. This plan's a little more mature. I think participants, you know, have a better idea of where they are investing, and you can see, like the 401A contributions have ebbed and flowed a little bit now that the plan has settled in with Empower, and you can see 57% new contributions going to target date funds, followed by the stable value option and the active and passive options. In terms of performance, the Capital Group American funds, strong absolute performance, you can see ranging from 3.2% up to about 7.2% for the 2050 fund. These funds tend to have a little more equity throughout the glide path than the Cowen benchmark here, the median peer. And you can see over the trailing year, strong performance versus all benchmarks and peers. So American Funds continues to do well. In terms of the individual options offered within the plan, up top you can see the passive index options. They all continue to track their benchmarks with a reasonable level of tracking error. In terms of the active options, the JP Morgan Large Cap Value Fund, you can see had a strong quarter, really strong trailing 1 year, protecting on the downside, outperforming by over 300 basis points. You will notice some underperformance with MFS. If you recall, this is, while it's a growth fund, it's a concentrated fund with about 53 stocks, and their style is growth at a reasonable price. So while they are a growth fund, they are not nearly as growthy as the index or the peers. They're going to be underweight information technology, which they have been over the last year, which if you recall, I mean, for instance, they don't own Tesla and they're underweight Apple. And that alone has accounted for 3/4 of the underperformance. This fund is really one that we expect to protect on the downside in a volatile growth environment, but no concerns. The other managers have all done very well. You can see MFS, extremely strong quarter and very strong 1 year, up over 800 basis points versus their benchmark. GW&K, again, very strong performance over the quarter and 1 year. And both MetWest, who we talked about in the pension, and the Invesco Stable Value Fund have done very well. So overall, we'll continue to watch MFS. I think the performance is certainly explainable and otherwise strong performance from all the options. Happy to answer any questions on the defined contribution plans.
Any questions for Britt?
But when did our money go in?
At the end of the first quarter.
Okay.
Chitsame, but there's contributions monthly, correct, to the 401? A, is that right?
It's actually weekly. So it's drawn out of the withheld from the employees' weekly payroll checks.
And you match it that week on the weekly basis also?
Correct, yes.
Thank you.
Okay.
Any other questions regarding performance? There's no other questions. Is there a motion for adjournment? Or
Move to adjourn.
is there a second?
Second the motion.
All in favor?
Aye.
Aye. Good to see you, Kari. Thank you for joining us. Motion
Thanks, everyone.
passed unanimous. Thank you
Have
very
a
much.
Merry
We're going to
Christmas.
see.
Happy holidays.
Yeah, Merry Christmas to everyone.
Yeah.
Happy
Happy holidays.
Happy holidays.
Happy New Year. Stay safe.
We'll miss our pizza and beer this year.
Yes.
Oh, you're right.
Take care.
All
Bye,
right.
everybody.
Bye.
So long.